Confused about the difference between secured and unsecured credit cards? This video breaks down everything you need to know about these two types of credit cards, including the pros, cons, real-world examples, and which one is best for your situation in 2025. We'll walk you through how secured credit cards work closed lock, what makes unsecured cards different, credit card real examples to help you decide brain how to choose the right card based on your credit goals. Bullseye. Subscribe to Credit Score and Card Savvy for more expert insights on building and managing credit the smart way. Intro. Hey everyone. Welcome back to Credit Score and Card Savvy, the channel where we help you grow your financial knowledge and boost your credit the smart way. If you want to stay up to date with the latest strategies in personal finance, make sure to subscribe and hit that bell icon so you never miss a video. Today, we're tackling a question that so many people have when they first dive into credit. What's the difference between secured and unsecured credit cards? Which one is right for you? What are the risks? What are the benefits? We'll answer it all in detail, with real-life examples, so you walk away confident and informed. What is a secured credit card? A secured credit card is a financial tool designed to help individuals establish or rebuild their credit history. Unlike a traditional unsecured credit card, a secured card requires a cash deposit that serves as collateral. This deposit also typically sets the credit limit. For instance, if you deposit $300, you'll generally receive a credit line of $300. Why do banks offer secured cards? Lenders use your deposit as a safeguard against missed payments. Since people applying for secured cards often have no credit history or a low credit score, the deposit reduces the risk for the bank. How it works: you apply for a secured card. Most issuers don't perform a hard credit inquiry or are more lenient with poor scores. You provide a deposit, typically ranging from $200 to $2,500. You can then use the card like any other credit card, within the credit limit. You must make at least the minimum payment each month. Ideally, pay the full balance. The card issuer reports your activity to all three major credit bureaus: Experian, TransUnion, and Equifax. If you use your card responsibly over several months, many issuers offer the opportunity to graduate to an unsecured version. Your deposit is refunded, and your limit may increase. The power of reporting. Why is reporting to all three bureaus important? Because not all cards do. If your card only reports to one or two bureaus, your responsible behavior might not reflect in your full credit profile. Real-life example: Jessica, a 19-year-old college freshman, has no credit score. She applies for the Discover It secured credit card and deposits $300. She uses it to pay for textbooks and coffee each month, keeping her balance under $30, 10% utilization. After 8 months of on-time payments, Discover upgrades her to an unsecured card, refunds her deposit, and increases her limit to $750. Within a year, her score grows from 0 to 710. What is an unsecured credit card? An unsecured credit card is the standard type of card offered by most financial institutions. It does not require a security deposit. Instead, the issuer determines your credit limit based on your creditworthiness, which includes your credit score, income, payment history, and debt-to-income ratio. These cards often come with more perks, such as higher starting credit limits, rewards programs, cashback, points, miles, lower interest rates for qualified users, introductory bonuses and offers. However, unsecured cards also carry more risk. Missed payments, high balances, and poor management can quickly damage your credit score. Real-life example: David, a 34-year-old IT professional, has a credit score of 735. He applies for the Chase Freedom Unlimited card and is approved with a $6,000 limit. He uses the card for travel and restaurants, earning 1.5% cashback. He sets up autopay to avoid missed payments and keeps his utilization under 10%. After 1 year, his score climbs to 760, and he qualifies for a premium travel rewards card. Key differences between secured and unsecured cards feature: secured credit card. Unsecured credit card requires deposit. Yes, no credit limit equals deposit based on creditworthiness. Approval likelihood high for low. No credit depends on credit profile. Rewards limited, more robust. Cash, travel, graduation possibility. Yes, after positive usage. Not applicable. Annual fees low or none, varies, can be high or waived. Who should get a secured card? Individuals with no credit history, e.g., students, recent immigrants, those with bad credit, scores below 580, anyone recovering from bankruptcy or charge-offs, people who want a simple card to rebuild responsibly, who should get an unsecured card. Users with fair to excellent credit scores 650 plus. Those looking for rewards, travel benefits, or 0% intro. April offers people who already have experience managing credit. Real-world case study. Scenario 1. Miguel, starting fresh. Miguel just moved to the US from Ecuador. He has no credit history and limited documentation. He applies for the Open Sky Secured visa, which doesn't require a credit check. With a $200 deposit, he starts building credit. After 1 year of perfect payments, he qualifies for an unsecured card from Capital One. Scenario 2. Brianna, rebuilding after divorce. Brianna went through a tough divorce and ended up defaulting on several accounts. Her score dropped to 540. She gets the Chime Credit Builder visa, makes weekly grocery runs with the card, and pays it off before the due date. In 10 months, her score reaches 670. Scenario 3. Thomas, seeking rewards. Thomas has a credit score of 715 and wants to maximize his spending. He chooses the American Express Blue Cash Preferred card, which offers 6% cash back on groceries. He uses it to cover his family's food expenses and pays in full monthly. He earns over $400 in cash back in a year. The psychology of credit. Secured cards teach discipline. Because the deposit is your own money, users tend to be more mindful. These cards help establish responsible repayment habits, budgeting strategies, and understanding of how interest and utilization affect scores. Unsecured cards demand discipline. With higher limits, it's easier to overspend. Success requires strong financial habits, planning for large purchases, emergency buffers. Common mistakes to avoid: using more than 30% of your credit limit, making only the minimum payment, applying for multiple cards too quickly, ignoring statements or missing due dates, assuming one missed payment won't matter. It does. Often 60 to 110 points drop. Final recommendation: start with where you are, not where you wish you were. Always check if your issuer reports to all 3 credit bureaus. Set up autopay to protect your score. Use your card for essential purchases only. Re-evaluate after 6 months, check if you qualify for graduation or a better card. Closing, thanks for sticking with us. Now that you understand the full scope of secured and unsecured credit cards, we hope you feel more confident in choosing the one that suits your needs. If you found this content helpful, don't forget to subscribe to Credit Score and Card Savvy, give this video a like, and share it with someone who's just starting their credit journey. Leave a comment below telling us which card you're considering or already using. We'd love to hear your experience. Until next time, stay smart, stay consistent, and keep growing your financial future with us. Recap: secured equals great for building credit with safety nets. Unsecured equals ideal for earning rewards if your score allows. Use either responsibly equals path to long-term success. Next up, check out our video on how to use your first credit card without falling into debt. Stay tuned for more insights every week here on Credit Score and Card Savvy.